Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about why certain artificial intelligence stocks are pulling back right now, such as Nvidia as well as C3.AI. After that, we're going to move on and talk about Palantir Technologies regarding or concerning whether or not it's too late to buy in to their PLTR stock. So we'll be discussing their latest news, catalysts, and price targets, as well as where this company could be in the future concerning their overall share price. Lastly, we'll round out the video talking about Sofi Technologies, ticker symbol SOFI, regarding how they are decreasing in their overall growth rate, but why this investor and this financial reporter believes you should still buy the stock. Because both Palantir and Sofi Technologies have pulled back in their overall share price recently, and a lot of investors are saying that right now is a good time to buy these companies. So with that being said, I would love for you to go and annihilate that like button right now, comment your thoughts down below, subscribe if you are new, don't forget to become a member of this channel to support me personally for as little as 99 cents, but if you can't afford that, don't worry. By subscribing, you're going to get this content for absolutely free. And with all that being said, let's dive straight into today's video. So let's start off by talking about why certain artificial intelligence stocks are pulling back right now. AI has lifted the entire stock market, causing it to rally in 2023, and most of these gains are due to generative AI as well as artificial intelligence. With this backdrop, we're going to specifically talk about three companies, which is going to be the semiconductor specialist named Nvidia, ticker symbol NVDA, as well as the enterprise AI software company called C3.AI, and then later in the video we're going to talk about Palantir Technologies and Sofi. Nvidia as well as C3.AI and Palantir have all pulled back recently, and this is because some investors believe that AI is a bubble and it's popping literally right before our eyes. This trifecta of AI stocks, being C3.AI, Nvidia, and Palantir Technologies, have all soared by 195%, 194%, and 139% respectively so far year to date. However, even with that being said, and the phenomenal exuberance that is surrounding AI stocks, a Morgan Stanley equity strategist named Edward Stanley recently cited and argued why we are in an artificial intelligence bubble. However, once we go over his analysis, we're going to counterbalance that with my own analysis as well as another analyst's analysis pertaining why we are not necessarily in a bubble, and instead artificial intelligence is going to lead to market rallies going forward with minor pullbacks. However, right now Edward Stanley, who has a more bearish stance on artificial intelligence, who believes it's a bubble, says that bubbles tend to rally a median 154% in the 3 years pre-peak before pulling back, and he says that that's exactly what we are experiencing right now. And if this analyst is correct, the broader stock market is also going to pull back because it's been driven by artificial intelligence gains. Nvidia particularly has a current share price of $423, while bearish analysts believe it could fall down to around $368, while more positive bullish analysts believe it could surge up to $767. As you can see, year to date, it has increased in their overall stock price appreciation by a very impressive clip, but I personally think that there's going to be further upside for all of these artificial intelligence stocks, but more so Nvidia and Palantir, not so much C3.AI. I think that stock is going to pull back very dramatically and continue to pull back because their overall future forecasts are somewhat flat, but I'll talk about that later in the video. Let's finish out talking about this Morgan Stanley analyst and why he believes we are in a bubble. He essentially concludes his comments by saying that stocks can't go up forever, and eventually these companies that have surged by over 150% will need to cool off. And in that sense, I do agree with him because that was actually my view as well, except for me, I believe it's going to be a minor pullback and then we are going to anticipate a future run-up after that. However, he believes it's going to pop and then just downtrend and then be flat in their overall share prices from then on. But now, since you know the bearish side, let's talk about a veteran in technology analysis, which is Daniel Ives, who is a Wedbush analyst, who says that artificial intelligence could spark the quote-unquote fourth industrial revolution. And here's what he says. He says, while many of the tech skeptics will point to today as a 1999 moment, a la on the verge of the dot-com bubble/collapse, given the significant move in tech valuations, we strongly disagree. He goes on to say a massive $800 billion AI opportunity, by his estimate, is now on the doorstep for the technology sector over the next decade. And honestly, I agree with both of these analysts. I do believe that artificial intelligence now presents an opportunity of almost $1 trillion market going forward over the next decade, while I also believe that these companies did grow too fast, meaning that a pullback is going to be imminent for them, and I think that's exactly what we are seeing right now. These companies are more than just going to bounce back and continue their upward trajectory, because downtrends or at least market pullbacks are not permanent. They are temporary short-term events that will lead to further long-term growth. And this is just a part of a healthy stock market cycle. Going in and talking specifically about Nvidia, they have state-of-the-art processors that are the golden standard for artificial intelligence companies. And this company already dominates the competition, controlling around 95% share of the machine learning market already, according to data that's been compiled by New Street Research. On the other hand, you have Palantir Technologies, who delivers data mining, data analytics, and AI solutions to government agencies as well as commercial enterprises. And then lastly, we have C3.AI as an outlier. Many people are flocking to this company not because they necessarily know what they do, but rather because their ticker symbol is AI. However, lucky for them, this is an artificial intelligence company, but their overall forecast does seem flat amidst this AI boom, meaning that for my personal picks, I would take Palantir and Nvidia over C3.AI every single day of the week. For me, I'm a firm believer in both Nvidia and Palantir Technologies, but not so much C3.AI. I think they have a lot more growing to do, and their overall financials need to catch up to their current valuation. However, I would love to be proved wrong with C3.AI, but for investors who are looking for long-term investments, really start to look into Nvidia and Palantir Technologies, and if you have a really long investment horizon, go see what you think about C3.AI. But now let's talk specifically about Palantir Technologies, ticker symbol PLTR, and we're going to discuss whether or not it's too late to buy Palantir Technologies. There's no question that the demand for AI, as well as machine learning, has increased the PLTR share price due to Palantir's disruptive technology. The company has a very long track record of developing artificial intelligence tools going back at least 2 decades. So this is long before the current interest regarding next-generation artificial intelligence algorithms. So due to the recent surge in Palantir's price, should investors now buy the company, wait for it to cool off, lump sum into this company, or something else? Well, let's take a look at the evidence and see what we can come up with here. There is a very compelling argument that Palantir Technologies could go much higher in their overall share price headed into next year. I think for this year, anything between $14 to $16 is an adequate price target for Palantir Technologies. However, what I do like about this company is that investors need to remember that Palantir has been working on AI solutions for over 20 years. So they have seasoned technology, which is leagues ahead of any of their rivals in the artificial intelligence space. So these rivals who are saying that they have AI expertise are essentially lying, because Palantir has been working on this technology for the last 20 years, while rivals have just recently started to become pioneers in this overall space. On top of that, the company has had a surge of demand regarding their artificial intelligence platform known as AIP, to where their CEO Alex Karp has said that the demand for AIP is unlike anything he's ever seen in the past 20 years. He said that they are already talking to more than 100 organizations to use AIP, and he's in discussions with 300 more. And this has caught the eye of Cathie Wood of ARK Investment Management, also known as ARK Invest, and specifically in her firm's Big Ideas 2023 report, Cathie Wood suggests that there is going to be a 4-fold increase in the productivity and manufacturing due to artificial intelligence, and there's also going to be a 10-fold increase in coding productivity. So this means that we could actually generate $14 trillion worth of revenue by the end of the decade when we take into consideration global statistics. Right now, PLTR stock trades for $15.52 per share, while bears believe the company is going to fall back down to around $5, and other more bullish analysts believe it could surge up to $25. In previous videos, I said that the company is going to downtrend and pull back, and that's exactly what we are seeing here on screen. And as you see, this chart goes back for 1 month, and I started to make my predictions around here and around here. So clearly, if you followed the overall predictions, you actually got to save this amount of money and got to buy into this company for a lot cheaper. Now, depending on how you buy into the company, I normally always advocate for dollar cost averaging, and how you dollar cost average into a company like Palantir Technologies without overexposing yourself more than a 5% initial portfolio allocation, because I think anything above that would be improper risk management, is you would do something like this. If you have a $100,000 portfolio, that means you could invest into Palantir Technologies at this time for a maximum allocation of $5,000. You would take that $5,000 and then you would divide that by your overall investment horizon. So if I am going to start to get into Palantir Technologies, I may invest $100 into Palantir Technologies every single week. This means that my average cost basis is going to average for this overall company, guaranteeing that I get a somewhat competitive average cost, meaning that you are lowering the overall volatility and the guessing of if you're getting a good deal or not. On top of that, Palantir fundamentally is an extremely strong company where Palantir is expected to generate double-digit revenue growth, and its earnings per share are expected to quadruple between now and 2024. Given the rapid acceleration of artificial intelligence, Palantir clearly is going to take advantage of that, and these are going to be very good catalysts going forward for their overall fundamental growth regarding their finances. So in essence, Palantir Technologies is a phenomenal company to dollar cost average into over the long term, but the company is going to be extremely volatile and go up and down aggressively, so clearly you're going to have the stomach to support that. Then lastly, let's talk about Sofi Technologies, ticker symbol SOFI, which is a fintech company which essentially operates as a digital bank. Sofi Technologies has doubled in their overall share price this year, and many investors are confident that the company and stock are going to go even higher and go to new places. Now, there are many other fintech companies that provide similar services to Sofi Technologies, but they are slightly more differentiated than other companies for a few reasons. Firstly is that their website and app are extremely easy to use, and they charge relatively lower fees than other competition. On top of that, customers can get loans, make deposits, open bank accounts, invest, get credit cards, debit cards, all from just the Sofi app. Lastly, their FDIC insurance is extremely competitive, and due to their acquisitions of Galileo and Technisys, the company is primed for future growth in their three revenue segments. Right now, they trade for $8.91 per share, while bearish analysts believe the company is only worth $3, and other more bullish analysts believe the company could climb to around $16 per share. Just like in Palantir Technologies, we have seen this company cool off in their overall share price, almost reaching what we are anticipating the company to actually be worth right here, and as soon as it drops below this line, then they are going to become a phenomenal buying opportunity for the long term. So now we can confidently invest into this company once the company drops enough to become a very competitive buying opportunity. So far, I'm extremely impressed with their overall financial services sales, and that segment specifically encompasses most of their new products, increasing by around 223% over the last year as of the second quarter. Now, Sofi Technologies still is not profitable, but two things are going to happen, and I also want to include Palantir Technologies in this conversation. When Palantir Technologies achieves their fourth consecutive quarter of profitability, which I easily think they're going to do, they could become eligible to enter the S&P 500, which is going to cause a lot of money to flood into Palantir Technologies. On the other hand, Sofi Technologies is going to become profitable at the end of this year. So both of these profitability catalysts are going to be phenomenal news for both Palantir as well as Sofi Technologies, and I can't wait for Sofi to start scaling their overall net income and become profitable. Lastly, let's talk about why the company even sunk in their overall share price. Investors essentially could be worried that the price was getting too high based upon the company's overall performance, meaning that investors decided to take profits after the recent heightened heights of this company during, or more accurately, right after their earnings report, and then we are seeing the company cool off, which is what I've said multiple times. But since the company is cooling off while the company is going down, that is the best time to invest into strong companies while the share price is falling. I know it's kind of against your natural psychological intuition that you shouldn't try to buy a falling knife or a dropping stock, but honestly, those allow you to buy the company at a very cheap and competitive price. But even now, they are at a reasonable valuation if you compare them to themselves, but compared to others on the market, they are trading for a little bit of a premium, but I would say that their growth rate offsets the premium that they are trading for. This means that there is still plenty of upside left in Sofi Technology stock, and the future looks very bright. But I would love to hear your thoughts down below about Nvidia stock, C3.AI, Palantir Technologies, as well as Sofi Technologies. Don't forget to go and annihilate that like button, comment your thoughts down below, subscribe if you are new, and I'll see you in the next YT video.